Welcome back to the Investor Coaching TV show. We're going to move to election because election is what's on everybody's minds. The election and the stock market. One of the things I've been hearing is this. Companies are holding a lot of cash on the sidelines. You know, that is something we hear about an awful lot. Companies around the world are holding a lot of cash on the sideline. Why? Because they really don't know what to expect after November. They don't know who's going to win, so they don't know necessarily what the procedure is going to be, what some of the things that they might expect tax law-wise. Well, you know what? Also, individuals are doing the same thing. I saw an article the other day that the amount of money sitting on the sidelines or that has come out of the stock market and is sitting in cash is unbelievable. And I thought about, well, why is this happening? Well, people are also scared about the election. They're fearful as to who's going to win. You know, you think about it, maybe one person wins and it might be good for business. Maybe another person wins and it might be good for business or might be bad for business or whatever. And what happens, people worry an awful lot about that decision. And a lot of times what they do is they just want to sit on the sideline until the election's over, and then they'll commit. Matter of fact, I got an email from somebody yesterday saying that, hey, you know, we're thinking about doing this. We got all this cash, a couple $100,000 on the sideline in cash, and we're not sure exactly what to do. Just thought maybe you'd give us some guidance, but we're waiting for after the election to make any changes or make any moves. And I thought, hey, that might be a good TV show topic. Election 2012. You know, what do we do? Well, maybe some of you have seen this acronym before, FEAR. You know, what does it stand for? Well, those of you that know, it's false evidence appearing real. A lot of people are actually very concerned about this election and what happens if one side wins the election versus the other. Now, I'm just going to call it what it is, what I hear an awful lot about. I'm on a conservative talk station when it comes to the radio show, and people often call up telling me, hey, you know what, I'm really worried that if Obama gets re-election, that it's going to cause really bad stuff to happen in the stock market. And that comes from this philosophy right here. Actually, this was from Investopedia on the internet, which is kind of like they have this thing out there where you can go and put information out and get information on investment topics. It's like an encyclopedia on investments in essence. It says, what are the main differences between Republican and Democratic approaches to regulating the economy? Now, most of you would answer, well, you know, I think that the Republican administrations are generally more business friendly, right? That's typically what you hear, and that's exactly what they say. Generally speaking, the Republican Party is considered to be more business friendly and favors a more limited role of government in terms of regulating the economy. Now, naturally, if you're thinking about this, what would you think would be better for the stock market based on this belief? Well, you would think that it would be better if a Republican is in the White House, right? Well, let's take a look at actual history right here. What you're seeing right here is different administrations in the near past history, going back to Kennedy. And what you're seeing here is what the stock market did during that president's administration. And what I want you to notice is that overall, the better stock market returns actually occurred during what? The Democratic presidencies. Yeah, right here's a Democratic presidency. It went fairly well. Then Republican, not so great. Carter, pretty well. Reagan, not bad. Clinton, wow, big return there. And you look at George W. Bush over here, G.W. Bush, and you see not so hot. And then Obama, pretty good so far. So if you look at it overall, what do we know? We know that it tends to be a little bit better under Democrats. And more about that in a second. And you might ask this question, Paul, how is that possible? I mean, you think about it, more business friendly, more regulation, more taxes under Democratic presidencies. That's typically what it is. How is this possible? Well, it's possible because of something I'm going to use a different country to explain. Hollande, you may know him as the new president of France. He recently came out with an announcement saying that he was going to raise taxes to 75% top tax rate on the rich. He was going to go in and you know, a lot of people, he didn't hide it. He didn't like the rich. He's said that before. And what we're seeing here is he's going to come in and he's going to try to solve France's problems by increasing the level of taxes on the wealthiest people in France. Well, let's see, how's that going to work? Think about it. If you were a wealthy person and you knew that somebody was going to come in and take 75% of every extra dollar that you earned, what would you do? I mean, think about it. From your standpoint, you would probably find some way out of it, especially being a wealthy person. Well, that's exactly what we're seeing. This article says that businesses are fleeing France as a 75% income tax looms. So what they're literally doing is going, you know what? I'm not going to sit here and take this. Matter of fact, on my radio show, I was talking about these people that what they do is they buy and sell businesses. Now, you got a person that says, hey, I've got this business, I'm getting to retirement age, I want to sell the business, I want to move on, do something else in retirement, and I want to sell this business to this person over here. Well, typically, you're going to have somebody that arranges that sale in between. There are a lot of those people in France. And guess what they're doing? They're heading over to the UK because they can still help these people sell their businesses in France, but they can do it from another country. So the wealthy don't just sit there and take it. And if you think about it, what's going on in France? They're going to lose all of the revenue by trying to come in and punish these people. Well, you think about it, what are we talking about here? We're talking about businesses and business owners and how they respond to what's going on around them. If you are a stock market investor, you are a business owner. And this is something I try to get across to people because I want you to realize that businesses will figure out a way. They will adapt to new circumstances. Now, it may not be great for the economy of the country that was trying to punish them, but respond they will. Now, if we look at the Reagan-Bush years, before you go, well, forget it. If Romney wins, that means I don't want to invest in the stock market at all. Before you go there, if you look at the Reagan-Bush years, and as a matter of fact, Art Laffer, economist, actually talked about how this election is very, very much like that particular time when Carter and Reagan were going back and forth with each other. Well, when Reagan took office, if I took $1 and invested it just across a broad array of U.S. stocks, large companies, small companies, value companies, large and small value, my dollar would be worth almost $6 during that period of time. So you don't look at it as, gee, it's terrible if Romney wins by any means. But just realize that it may not be, necessarily that bad if we have a Democrat in the presidency or in charge either. So, moral of the story is this. Here's what I want you to get out of this segment. Don't try to time the market. Don't try to figure out what's going to happen. Markets adapt to new circumstances, and literally they are forward-looking. What will happen is if we think one person is going to win the presidency over another, the market will adapt to that before it happens. So for you to sit there and wait for it to happen is pretty much pointless, number one. Number two, remember, businesses find a way. They figure out a way to adapt to the new circumstances. They will move out of the country. They'll move jobs out of the country. They'll move jobs into the country if it's better to have them in here. They will adapt to make sure that they are profitable. That's the way businesses work. And number three, success comes from discipline. You jumping in and out of the market and trying to figure out what's going to happen next only creates more wealth for the investment firms and the brokers. Don't do it. It isn't helpful for you. It isn't good for your portfolio. It's not good for your family. It's only good for the industry. Tell you what, stay tuned. Be right back after this. Got more on the Investor Coaching TV show.